everyone, and welcome back to another episode of Globe Talks with Traders, where you can learn the ins and outs of crypto trading. I'm your host Sunlight, and today I'm delighted to welcome onto the show Stefan von Haenisch from OSL.
Hi, thank you for having me.
You're welcome. So, what you want to find out about how OSL puts their clients first through risk management and how you can control your emotions on very volatile days. Now, on to the interview. Hi Stefan, how are you?
I'm good, thank you.
I'm good. So let's jump right into it.
Sure.
Could you tell us a bit about yourself and how you got into crypto trading?
Absolutely. So I was actually in the traditional financial space when I first left uni. Did 5 years in commodity sales trading for a German bank, and then eventually took the plunge to move across to Singapore, where I carried that on. That was roughly around the time that COVID hit, and of course, being in that sort of situation, the commodities markets weren't doing much. There was no way to actually build the commodities portfolio. And I think it got to the point around about then where I just found crypto on the side, looking at Bitcoin, trying to understand it, watching videos, reading articles, and just generally falling down that crypto rabbit hole that so many before me have done already. And I think it got towards around the end of 2020 when I then kind of made the decision to do it full time and started applying for a variety of jobs in Singapore.
Amazing. And is that when you found OSL?
That's when I found OSL, absolutely. Yeah, they're one of the first companies I actually contacted. I liked the fact that they were founded by other people who had essentially grown up in the traditional financial space. So they had a very clear understanding of what they wanted to achieve, how they actually wanted to build a company that services institutions. That is from a compliance perspective, from a regulatory risk perspective. And you can really see how that's developed over the last, I think of 7 or 8 years now. It's the oldest OTC trading desk in Asia. The parent entity, BC Technology, is listed on the Hong Kong Stock Exchange under ticker 863. And we are the only crypto digital asset platform that has Type 1, Type 7 licensing in Hong Kong. Which makes us very unique. That also means we have to be much more careful in terms of the coins that we trade, how we look after client assets, how we speak to our clients, how we treat them, which kind of sets us apart. And we can definitely tell from the clients that we've picked up over the years that they really appreciate the kind of scrutiny that actually the SFC and now the MAS in Singapore are putting on us to allow us to operate.
Amazing. So you guys are operating right now. So you mentioned Hong Kong and Singapore. So are you just operating in Asia or?
So we have the main we have OSL Digital Securities in Hong Kong, which is the licensed and regulated entity. Then we have OSL Singapore Limited, which is currently working under an exemption from the MAS. And then we also have more recently registered OSL Americas or OSL Digital Limited. The trading team essentially at OSL consists of traders in Hong Kong, Singapore, and Mexico. And what that allows us to do is actually have traders working around the clock, servicing our clients 24/7. We essentially have 4 main business models. The trading aspect on the OTC side falls under the prime brokerage. You can trade directly through us, direct messaging channels, be it Bloomberg, other messaging channels where you have the client, the trader, provide market updates, trading, prices, everything that you need from front to back office, which actually is another big draw to OSL, because when you're speaking to other large exchanges, they don't necessarily have that. I don't know if you ever tried getting in support, whether that with a retail exchange, trying to find out what happened to a trade. It's impossible. You're speaking with automated bots, whereas with OSL, you have that white glove service that companies really value.
Lovely, no bots here.
No, absolutely not.
Right, as a sales trader at OSL, could you talk us through what a typical day might look like, if there is even a typical day?
Yeah, it does. It does vary a lot, absolutely. Normally we start at like 8 in the morning. We get the books handed over from the Americas after they've finished their shift covering the other side of the world. Get a quick update on what clients have been doing, how the market's developed, and then myself and the rest of the traders will actually sit down and just look at the market in terms of fundamental analysis, technical analysis, and form almost an opinion or a view of where we think markets might actually move that day. We recap all of that in a video that you can actually see on our website as well on a daily basis. It's free for everyone to watch. And on the back of that, we then start speaking to clients who we know are positioned in a certain way, are waiting for certain price targets to be hit, to reach out and start building that flow. At OSL, we don't take any risk ourselves. So whenever a client comes and asks for a trade, whether it's to buy 100 Bitcoin or 200 Bitcoin, we go into the market and hedge that trade straight away so that we're never holding any risk on our books ourselves. And whilst in bull markets that might seem very conservative, we can actually see just how much that saved us during the course of the market turning down over the last 6 months or so. And you're seeing so many other companies really start to get wrecked. That's not our business model. We're there primarily for our clients, allow them to trade whenever, and even in times of high volatility, still offering really tight pricing. The way that we're able to do that is actually have 7 or 8 different liquidity providers that feed into our pricing mechanism. What that means is if one of the LPs or one of the exchanges goes down, as we have seen in numerous occasions when the volatility really starts to move, we still have 7 or other LPs to actually trade with. And so that means that we're never down. We're always there, able to execute at sharp prices and then actually help clients get their money back or get into the market or to execute their trading strategy.
Oh, amazing. Love that.
It's good fun.
So what would you say your kind of demographic normally for your clients are? Are they institutions or retail?
We've always had the big drive to really service institutions. That's our focus. We want to be, the way that we see the market developing in the next kind of phase is really that institutional adoption side. But institutions trade very differently to retail. They need to ensure that their funds are safe. They need to make sure that they're trading with regulated entities, that the coins that they're buying that haven't been used for nefarious purposes in the past. Essentially, whoever they trade with, their counterparty that they trade with, needs to be in good standing. And that's where OSL really excels with the licensing that we have, the framework that we have in place to ensure client custody, ensure the coins are clean, come from reputable sources. The liquidity providers that we use are all also, in their own right, reputable companies. We won't be trading on unregulated exchanges, for example. And it's that security that really is, I think, one of the key factors that clients actually want and actually come to us for. So we won't actually be trading all these random altcoins that you see explode throughout the bull run cycle. And clients would be, oh, but I want to trade this, I want to trade that. Like, yes, we know, we'd love to take part in it, but we're not going to do that because we know at the end of the day, the risk of trading those is very high and we don't want our clients to get hurt.
Amazing. So speaking more on that, could you speak a bit more about your trading strategies then? So
the trading strategies, they vary from day to day. It completely depends what the market's doing and the clients, what our clients are asking us to do. We don't take risk. Everything we trade is back to back. But the way that we see it is, if we see that the market might be turning bearish over the course of the day, be it from just technical levels being broken or certain macro developments, that's how we kind of then start to formulate a plan. If we know that a client is saying, okay, look, we know that he wants to start building a long position in ETH, for example, and we start seeing those key targets being hit, then we'll start executing it. The kind of key factor for the OTC trading is that we're able to execute large trade tickets, $5, $10, $15 in a relatively small market. If you trade one of those tickets in one go on an exchange, you'll lift the order book by multiple percent. And what we try and do is ensure that the clients that have a trading strategy remain completely anonymous throughout the entire time of the trade execution, because we want to ensure that we don't affect the market. We don't want to give away to the rest of the market what our clients are doing and how they're trading, just to ensure that anonymity really prevails. It's super important for us. And so on the days where the days that we enjoy the most are the ones with the most volatility. That's what gets people excited. It's when they want to start trading positions, jump in and out, and that where it actually becomes very, very fun. Okay. Well, to speak more on that, do you prefer bull or bear? Definitely bull. It's nice to see. I think the general mood in the markets, in the office, on social media is always much more upbeat in a bull run. in the bear market, you do feel at times like you get to take a bit of a beating, especially from those market participants, or even should I say market watchers who don't enjoy crypto or think that it has any value in it whatsoever. Bull run is just much more of a positive vibe. And luckily, throughout Bitcoin's life so far, we tend to spend most of the time, actually no, I think we spend less of times in bull markets and more of the time in bear markets. And it shakes out the tourists, so to speak. Yeah, I mean, every time the market tanks and goes through that prolonged bear market phase, it becomes very quiet. Those who are in it to make a quick buck disappear very quickly. And it's those times, I think, that we're starting to get into now potentially, where you actually start to see that new innovation come. There's products from the previous cycle that didn't quite work out for whatever reason, they get flushed out. This is where the innovation builds. And those who actually remain in bear markets, and this is actually would be one of my recommendations for those actually looking to break into the space or become a trader in the space, is these times in the market where price is depressed, no one really is sure of where things are going, companies are going bankrupt. This is where you want to really start to do your own research in the space to understand how the market's developing and to prepare yourself for that bull run.
Right. So what would a successful trading day look like for you?
Successful trading day is when clients are happy with the way that we've executed the trade. That means we've put on a large position on their behalf without moving the market. At the same time, we on the trading side or on the trading desk haven't booked a loss. What's very important is that, yes, our clients come first. You could argue that the welfare and the protection of the company at any given stage in the market is priority. If we can't protect the trading books or can't protect the company from significant losses, we're going to fail and the company is going to go out of business. And it's just a handful of traders that do have to be in control of that the entire time and looking after the company. We are that first line of defense. When we execute client trades in a sensible manner, in a way that they wanted to, they're happy with the price, because most of the time we are in competition with others as well. Our client will ask us for a price, but we'll ask maybe 3 or 4 other shops as well. We want to make sure we give the tightest price at a level where we can also hedge ourselves instantly, locking in a good spread for the desk itself, generating money for the company, whilst also having a client who's happy with the trade, the way that it was executed, it was settled in a timely manner, coins were sent out to him or her in a timely manner, and that everyone's happy at the end of the day.
Amazing. Now, conversely, what's the riskiest trade you've ever made? I mean, of course, well, you said, you don't take on risk, but surely there must be some sort of, risk.
Absolutely. I mean, especially when it comes to very volatile market days, where you start to see Bitcoin the other week dropped 20% in a day. It's like, how do you actually make an aggressive and a fair price to a client in a market that moves so much? Because you're almost having, whenever you trade with a client, you're essentially doing 2 trades. You're trading with the client, but then you're also trading with the LP or the liquidity provider on the other side. And you need to make sure that the prices there are in line, at least. And we're talking the spreads between these prices could be very small, anything as little as 0.1% at times, which is a tiny margin for error in a market that has such volatility. So I think at OSL, every trade in itself has inherently the same level of risk if you put size to one side, but especially in volatile trading days, it can happen where you agree a price with the client, and then by the time you want to do the hedge, markets jump by 1% or 2%. And that's where it then becomes quite tough. And that plays on your emotions as well, because you did everything by the book, yet somehow you kind of came out with a loss on the other side, which no one wants.
No. So if, let's say, that does happen, how do you control your emotions when that happens?
It can be tough. I mean, it doesn't get any easier either. I think every time it happens, you do feel at fault. Obviously, luckily, it happens once in the blue moon. But that's just to say, it hurts every time. If it's especially hard, you probably have to take a couple of minutes at the desk. Luckily, there's 4 or 5 of you sitting there, all monitoring the chats and all working to ensure that we're staying within our risk limits and executing trades in a timely manner. But yeah, it's one of those things where you do have to detach your emotions from it at one side. And that's also very true of those looking to get into the space themselves. If you're going to be trading on your emotions, you're going to lose every time. You have to have your own strategy in place. You have to understand or know how you're going to hedge depending on how volatile the market is. If you stick to your execution plan, you should be fine. If it doesn't work out, you sit back, you reassess, and plan for an alternative outcome the next time around.
Amazing. Plan A, plan B.
Yeah, it's horrible. It's all about planning. That's the thing. And especially when you're looking to trade, or you have a client ready to trade and they finally jump in, it's important to not rush everything. You have to take the time. And if you know that a client's going to come in with a big order, you need to have everything lined up in place, because if you sit down unprepared and you just try to price everything in that instant, chances are you'll forget something, or you'll miss out, or you'll essentially just not execute at the best of your abilities.
Just kind of to circle back to, speaking on volatility and going up and down the market. So how did you and the team at OSL navigate the crash?
Yeah, that was an eventful few weeks, to say the least. I remember the day coming into the office and UST pegging from the 1-to-1 US dollar peg, and Luna, I think it was down like 60% that day. Now, this is one of the perfect examples as to how OSL or the risk management at OSL actually did exactly what it was designed to do. We take a very kind of disciplined approach to the coins that we offer to our clients, and that we actually look to trade. Luna was one of those that we were always looking at with interest, because we saw that demand building up for the UST stablecoin. We were looking at it in earnest, but ultimately we saw that there were inherent risks involved in a stablecoin that was backed by a non-kind of stable asset in itself. And I don't think anyone expected it to collapse as fast as it did. But when it did, it was pretty catastrophic. But for us, again, we've not traded Luna or UST. More recently with Celsius, we've never touched staked ETH. We don't have any exposure to the companies that are being spoken about or touted as potentially being on the brink of bankruptcy. We're always very conservative, and that's something that we will continue to be. Just given the institutional clients, they need to make sure that OSL as a trading partner can operate through thick and thin, doesn't give out needless credit to counterparties that otherwise wouldn't be able to get it, or have trading relationships with these sort of unregulated companies. So we were very, I don't want to say lucky in that regard. It was simply our risk management and our general kind of risk adversity doing exactly what it was designed to do. So whilst the trading day itself was pretty brutal to watch, it was actually very fun to also be in that environment, actually witness it firsthand. I think it was my first major black swan event in crypto as well. And a colleague of mine, he's been in the market for 10 years or so, and he said that after Mt. Gox, that was the second craziest day in the markets for him, which is saying something. But what it all essentially boils down to, and what these sort of events will lead to, is just more scrutiny from regulators. And we need that regulation to step into the market. You can't have a market like this where unregulated companies are operating and not offering these products in the way that they are, because damage will be done. Whereas you have central banks, Feds, bailouts available in the traditional financial markets, you don't have that in crypto, and that has with pros and cons as well. But the way that we see the market developing at OSL on the back of these is there will be more scrutiny and more regulation around stablecoin usage. Companies offering essentially financial products, be it borrowing and lending, they will be looked at, they'll be forced to be regulated to make that space more safe. And as you see that regulation come in, it's likely then that the volatility over time will start to decrease. But it's the major stepping stone for adoption over the next few years, 100%.
Amazing. So when is your personal opinion on when regulation will start to come into play?
I mean, we're seeing it already. We saw Biden release paper recently on how DAOs are supposed to be structured, how you actually classify projects and coins depending on whether they offer yield, voting rights. That's all already in the pipelines. We're seeing central banks work around CBDCs to try and understand how they could be implemented. You already have banks in the US allowed to offer cryptocurrency custody. They actually are able to use instant settlement networks that run on Ethereum to move or to settle fiat currencies around as well. So it is definitely, you're seeing it all around the world, 100%. You always kind of see that seesaw, right? You see companies or you see politicians say there's no value, it needs to be regulated, it needs to be banned. And then you have others kind of stepping in. And we're seeing the likes of Cynthia Loomis in the US really start to bang the Bitcoin drum and bring forward legislation that's absolutely necessary to allow the space to continue further.
So Stefan, what's next for you and OSL?
We're well positioned for the coming few months and years at the very least. We're seeing clients continue to onboard at a rate of knots, larger clients, institutional clients, and all around the world really. Obviously our focus remains to be Asia, but we're making heavy inroads into the Australian crypto space, which is also developing. I think in Australia they've released now 5 spot Bitcoin ETFs in the last 2 months. So you can see that adoption in Australia really start to take place. If you want the space to develop further, you have to have institutions coming in, and they'll only do that when there is that secure framework in place. The way that we've been speaking and the partnerships that we've been developing with the likes of DBS and Standard Chartered, they're just a couple of examples of how we're positioning ourselves. We don't see banks as the enemy, as a lot of other cryptocurrency market participants do. We need to work together with the traditional financial space to push this entire industry forward in the right direction.
Thank you so much for watching this episode. If you enjoyed the content, don't forget to give us a like, comment, and subscribe. So thank you for your time, Stefan, and I'll see you next time. Bye.
Goodbye.